All right, y'all. We are live on I don't know. It's an average Thursday morning. And guys, in this live stream, I want to talk about something very important, which is how to find winning trades in marketcipher. Okay, guys, if you are new to trading, if you are new to marketcipher, I understand the frustration that you can have if you've been trying to use this for a long time and you simply just cannot find those good entries. You see everybody else getting these good trades on the interwebs, and you're like, what can I do to find these good trades? Guys, I have broken it down step by step how you can find the best trades using marketcipher. And my goal here is to give you guys the skills and the knowledge that you need to look at marketcipher perhaps in a new way and learn how to find those perfect entries, okay? Now, guys, Bitcoin right now is absolutely doing something amazing, okay? We are right now looking like we are about to break out of this bull flag right here. And on the 4-hour, on the 24-minute, I don't know if this would fit my 4-hour, 24-minute strategy, but we definitely, on these lower time frames, have some nice momentum coming up here. On the lower time frames, we definitely have printed a bottom. We definitely have some kind of trigger wave happening right here. We've been trading within this channel, so keep an eye out on this if we break above this channel. And also Bitcoin, also marketcipher is telling us, that we have upward momentum. That would be a really nice entry into a trade. We could probably set our take profit, perhaps to 61,500. Keep your eyes on that, y'all. But in this live stream, we are going to be talking about finding good trades in marketcipher. Let me come into the chat real quick just to say, hey, everybody, is this stream even live? I don't even know if the stream is live right now, to be honest with you guys. Let's check it. Okay, cool. Yeah, let me refresh this screen here. All right, we are live, guys. I apologize about that, guys. All right, y'all, FOMO into the like button, and let's get into this. Let us get into this. And make sure, guys, you're paying attention to what's happening here on Bitcoin. I don't want anybody to miss out on a nice entry just because of this live stream here. But here are the steps to finding a great marketcipher entry. First of all, you need to have marketcipher, right? That's obvious. If you don't have marketcipher, you should get it. Go to marketciphertrading.com, or you can click the affiliate link in the description of this video and it would help out my channel. But either way, you got to have marketcipher. Okay, step number 2, and this is extremely important. We need to make sure that we select the right time frames to trade off of. Okay, we cannot just open up marketcipher like this, put on marketcipher B, and go from time frame to time frame and look for, some kind of pattern like this. We can't just go from time frame to time frame and see what looks like a good entry and enter there. What we need to do is we need to use multiple time frames. We need to have one time frame that will be our environmental time frame, and then we need to have another time frame that will be our actual execution time frame. And here's how you're going to choose a time frame. You're going to start with a larger time frame. Just pick one. Just pick a larger time frame. It could be the 6-hour, it could be the 4-hour, it could be the 3-hour. And then what you're going to do is you're going to take the number of minutes that are in that time frame and divide it by 10. So if we're on the 4-hour, let me pull up my handy dandy calculator, y'all. Let me pull up my calculator and we're going to do some math. Now, how many minutes are in 4 hours? Let me calculate that real quick in my head. 240 minutes are in 4 hours. So what we're going to do is we're just going to divide 240 by 10. And this will give us the lower time frame that we want to use in order to actually enter into the trades. That is what we're going to use to actually enter into the trades. And you can do this with any time frame. So if you're going to do the 3 hour, you would do 180 minutes divided by 10. And then you would trade using the 3 hour and the 18 minute. Or if you're going to do the 2 hour, you would do 120 minutes divided by 10. And then so you would be using the 2 hour and the 12-minute time frame. And you don't have to do it this way, guys, but this is the way that I have found works the best for me. And once you have your two time frames, in order to confirm that they're working, you're going to start to look for synergistic properties between these two time frames. So my two favorites are let me close this out here. My two favorite time frames are the 4-hour time frame and the 24-minute time frame, okay? So what I'm going to do is I'm going to look for synergistic properties between these two time frames. And you're going to just look at these big pumps, right? Or big dumps, and ask yourself, what happened right here that made us pump? And you're going to start to look across both time frames and see if you can find some kind of synergistic property, right? Where you can say every time X, Y, and Z happened, we got a price pump. So I'm going to close out this market cipher, and I'm going to put on my new market cipher so that I have the way I like it here. And let's just take this last pump for example, guys. Let us take this last pump that just happened. Okay, so I notice when we started to pump, we come over to our 4-hour time frame. And what do we see on Market Cipher B? We are printing a green trigger wave, right? We could consider this an anchor wave because it's lower than this one here. So we see the upward momentum. We have a green trigger wave. And then when we come to the 24-minute time frame, as soon as we start printing this green trigger wave, we notice something. We have a money flow crossover right here where the money flow on Market Cipher B has crossed from the red into the green. As soon as this happens, okay, if we zoom in, as soon as it happens, on the exact candle that money flow crosses over, if we had entered right here, we would have had perfect timing for this large pump up, okay? We would have had perfect timing. And while I'm doing this, I just want to take a look back here and monitor what's happening on my marked up chart. So now that I found this synergistic property, right? At this point, I noticed one instance of this happening. Okay, I noticed one instance of this happening. So now what I should do is I should go back in time and just notice if this happens more than once, right? I'm looking for synergistic properties that are consistent. So let me go back to the last time money flow crosses over from the red into the blue, which happened back here. Okay, look at this. So if I am printing a green, let me see where exactly that happened. Okay, right here. Printing a green trigger wave on Market Cipher B on the 4-hour, okay? And simultaneously, I am getting a money flow crossover on the 24-minute, okay? Simultaneously. So as soon as this thing starts printing, we're already having a money flow crossover, okay? So we just got the money flow crossover. If we had entered on the next candle after that money flow crossover, right here, we get in for this huge pump. So what I'm doing is I'm just taking mental notes, right? I'm taking mental notes as I'm looking at the charts. I'm looking for things that just seem to always happen between the 4-hour and the 24-minute. So far, it seems that if we are printing a green trigger wave on the 4-hour time frame, and right around the same vicinity, we're having a money flow crossover, it seems that we get a nice big pump. Let's see what happens the next time that we go from the red into the green. And really, I'm looking for, significant movement from red into green here. So this would be a perfect instance right here where we have some nice deep red and then we cross into the green. So let's see what was happening on Market Cipher B during that time. Okay. So on Market Cipher B, we started printing a trigger wave right here is a very clear trigger wave. We had a nice deep anchor right here. Then we had a nice trigger right here. Then we had another nice trigger right here. And as soon as we start printing this trigger wave, a little while later, we get a money flow crossover on the 24-minute. And what do you know? As soon as we confirm that, we get a nice pump, right? Now, when you're in this stage, guys, when you're in this stage, you're just looking for similarities. And what you're going to do is you are going to keep layering on top of these synergistic properties that you're finding. For example, you might find that when we're printing something certain, like a trigger wave on the 4-hour, you might find on the 24-minute that there are multiple indications that would have you enter a trade, right? You're going to keep going back and adding to these things, right? So right now I'm just looking at the money flow crossover, which I saw a few times happen. Let's see if it happens anymore, right? Let's see if it happens anymore. So right here, again, we have a money flow cross from the red into the blue. It's a little bit shaky here. It's a little bit shaky. But as soon as we print this nice bottom and then we have a money flow cross into the blue, we get a really nice pump upwards. And what do you know? We had just printed a trigger wave on the 4-hour right after we crossed over from the red money flow into the blue money flow on the 24-minute. And again, we got a nice little pump. So you guys get the idea. What you're going to do is you're going to keep looking for things like this on your 2 time frames. Okay, it doesn't just have to be money flow. It doesn't just have to be trigger waves. It could be many things. It could be the RSI. It could be the VWAP. What you need to do is you need to look for yourself and find out, okay, when A, B, C, and D happen, I am going to enter into a trade. That is what you should be looking for. Now, the third thing you need to do is learn some basic technical analysis, some basic top-down analysis. If you are totally new to trading, if you are totally new to marketcipher, it will greatly, greatly, greatly improve your ability to find good trades if you just learn basic support and resistance. And guys, write this stuff down if you're new, if you're unfamiliar, write these steps down because these will really help you find those good trade entries. Learn basic support and resistance. Learn trend lines. Learn common trading patterns. A great example of a common trading pattern is what we see right here, right? This is typically people call this thing a bull flag, right? A bull flag is where you have a flagpole like this, an upward boost of momentum, a run up, a huge run up, and then we consolidate in a downward channel for a little while, and then eventually what happens is we will break out of that channel, and typically a bull flag, we can set our take profit if we take the flagpole and just drag it up to the top of the flag here. We can set our take profit at the exact length of the flagpole, give or take. So what do you know? That just so happens to be the previous all-time high. So learn these things. Learn basic technical analysis. Learn support and resistance. Learn patterns. And guys, if you are unfamiliar with these kinds of things, it's really not that difficult. For example, support and resistance can easily be drawn on a chart. All you have to do is look for places where price has historically found a sticking point. That's how you draw support and resistance levels. So if you're completely unfamiliar with support and resistance, a support is something you can think of as a floor where price has a hard time breaking below. So when you're looking at your charts, you're going to start on the higher time frames and you are going to look at the candles and see, okay, where did they open and close, and where can I kind of draw a line where there was a lot of opening and closing happening in one point. You're always going to start looking to the left of your chart. And you would draw a line maybe right here because price tried to break through here 2 days in a row and was unable to. Price tried to break through here again and was unable to. Price tried to break through here again and was unable to, and again. And we're going to think of these support lines as places where price has trouble breaking below and also places where price tends to go back to again, right? Once this was a support, price came back here again. price came back here again, price came back here again, until we continue with the uptrend. So we're going to be drawing these areas of support and resistance. If it's a support, that means it's a floor. If it's a resistance, that means it's a ceiling. So check this one out here, guys. Right here, we can see price had a hard time breaking above this level. Okay, right here, price for 4 days in a row could not break above this level. Then again, for 3 days, price could not break below this level. Could not break below for all this time. This was the floor. And then when price did break through, the floor became the ceiling. It became a resistance again. And marking out these levels gives us a frame of reference from which we can place our trades. If we know price has a history of returning to these places, then we know, for example, if we're coming to a support, right? And we know we're coming to a support. If marketcipher is giving us a bullish signal, like it did right here, we got a green trigger wave right when we were coming to this support, we would know, okay, we're coming to a support where historically price cannot break below. marketcipher is also telling me that we have upward momentum and we got to bounce off. Would you look at that? Would you look at that? So learning basic technical analysis, support and resistance, trend lines. Does price bounce off a trend line? The way you would draw a trend line is simply just by connecting the lows of the price together like this. Okay? It doesn't have to be perfectly exact. You're just generally connecting the lows. And you can see historically, every time price comes down to this trend line, we get a nice little bounce off. It happened 1, 2, 3, 4, 5 times. So that can kind of tell us, okay, price is coming down to a trend line. I know historically we've gotten a bounce off of here. So if we're about to get a bounce off a trend line, if we're about to get a bounce off of a support or a resistance line, you go back to your strategy where you look at your multiple time frames and your synergistic properties, and what you want to do is you want to line everything up. You want to line up your synergistic properties that you saw on marketcipher, and you want to combine that with using support and resistance, with trend lines, with common trading patterns. Common trading patterns. That's what we want to look for. Like right now, this is the 1 hour chart, and let's take a look at what marketcipher is telling us. marketcipher is telling us we still have some downward momentum before we come up again on the 1 hour. So we should not think that we're going to break out of this bull flag until marketcipher is telling us, guys, we're about to break out of the bull flag. That's how you're going to find those perfect entries. Now, the fourth thing, guys, and this is very important, is coming up with your confirmations, okay? And this goes right along with step number 2. Step number 2, where you're looking for synergistic properties. Step number 4 is you need to find a combination of synergistic properties, and these are going to act as your confirmations. When I talk about confirmations, I am talking about certain things that must be true for you to enter a trade, okay? So basically, the way we can think about these confirmations is this. Okay, we want to say if A is true, then we enter, and we want to find as many of these as we can. It can be as little as 2, it can be as many as 6, okay? But what we're going to do is we're going to stack them up on top of each other, and we're going to create what I like to call an algorithm. It's not run by a computer, it's run by you. And basically, once you have all your conditions before you enter a trade, you need to then say, if all of the above is true, then enter a trade. And the way you find your confirmations is going back and looking for those synergistic properties. Okay, so for me, guys, I will give you an example of a trading strategy that I'm sure many people are familiar with. It's one that I use. And I'm sorry that I have red candles instead of purple candles. I really just don't like red candles. I'm going to use purple. Because purple is soothing to the soul, guys. It's soothing to the soul. My favorite strategy is using a 4-hour time frame and a 24-minute time frame, and I have 5 confirmations, okay? I don't only use marketcipher. I also use an indicator called Wolfpack ID. And guys, when you're looking for synergistic properties, when you're looking for your confirmations, experiment with other indicators, okay? Experiment with other indicators. Market Cipher is a great indicator, but the more confirmation you can have that a trade is going to move in your favor, the better, right? The more confirmation you can have that a trade is going to move in your favor, the better. And what I really like about the Wolfpack ID is it gives me a secondary confirmation where I know that I should only enter a trade if the Wolfpack ID is telling me I should enter a trade. So I'm looking at support and resistance, I'm looking at Market Cipher B, and I'm looking at Wolfpack ID for my strategy. And here are the things that I am looking for in my strategy. Okay? First, I'm looking for a trigger wave on the 4-hour Market Cipher B. Okay? Then I am looking for the Wolfpack ID indicator has crossed over the 0 line and changed color. Then I will enter a trade. Then I am looking to see if I have a trigger wave on the 24-minute, and this is just for this one strategy. I have many strategies, but this is just an example. Then I am looking to see that the Wolfpack ID has crossed the 0 line on the 24-minute. And then I'm looking to see if we have a money flow crossover on the 24-minute. And, typically the way I trade is, whatever comes first, whether it be a trigger wave on the 24-minute or a money flow crossover, whichever one of these comes first is the one I would enter on. So really, we could consider these two as one, right? These two right here we can consider as one, because if these three conditions are true, then if one of these conditions are true, I will enter a trade. Okay, and so this is the algorithm that I use to trade my strategy using the 4-hour and the 24-minute time frame. Let me show you guys what that would look like in action. Okay, so we come over here to the 4-hour time frame, and let me go back in time. Let me go back in time to January, where pretty much, when we're in a strong uptrend, this strategy works the best. I have to come way back. I have a question in the chat. What is Wolfpack ID? WPID is Wolfpack ID. It's this indicator right here. Check it out. Just search in your indicators for Wolfpack ID. Okay? And here's what I'm going to do. Wow, we're still in February. Let's come back to January. Let's see. Let's go back to January 7th. I'm sorry, February 7th. Let's go back to February 7th. I said January instead of February. February. Okay, here we are, January 7th. And check this out, guys. So, we are printing on Market Cipher B on the 4-hour time frame a trigger wave. Why is this considered a trigger wave? When we're looking at waves on Market Cipher, we're not just looking for dots, we're looking for momentum to move upward. We're looking for general direction, right? So, I'm looking at Market Cipher as an entire structure. Market Cipher is basically taking the price action and translating it into another language for us so that we can easily understand what's happening. And if we look at Market Cipher as a structure, we can see that it will tell us what is happening on the market even before it happens. If we just draw on it like this, and then we draw on it like this as well, we can see that it's giving us the direction of the market. When the majority of the red and green dots are printing above the 0 line, we are in an upward trend. When things start to print in general below the 0 line, we're in a downward trend, and we're always going to have outliers that just pop below the general trend, right? But the point is, we can see market direction before it starts to happen. We start trading sideways up here, but Market Cipher is already telling us that we're moving down with momentum. Again, we're trading sideways right here, but Market Cipher is telling us we're moving up in momentum. And so when I say an anchor wave, really what I'm looking for is an established bottom, a point, a reference point from which on both sides we can see direction moving in the opposite way from this wave. That's what we're looking for. That's how we identify an anchor wave on Market Cipher. This is how I identify it. It's less of just a big old wave. It's less of looking for a dot. It's more of giving yourself a reference point from which you can see direction. So that's why this would be considered a trigger wave up here, even though it's so high, is because we're still getting the direction upward. So my first thing I'm looking for in my algorithm is a trigger wave. Is there a trigger wave forming on 4-hour market cipher B? Right here on February 7th at about 23 o'clock, yes, we have a trigger wave forming on the 4-hour time frame. Okay, so we on the 24-minute time frame, when this is happening, look at what's happening. We're still, money flow is still in the red, and we still have downward momentum on the 24 minutes. So we are not entering a trade. Second thing I'm looking for, 4-hour time frame. Has the Wolfpack ID crossed over the zero line? Well, if we look here at February 7th, we can see that as soon as this green dot starts to print, Wolfpack ID is about to cross over the zero line. And really, guys, if Wolfpack ID is changing color, that's as good to me as if it was crossing over the zero line. Okay, it will change from red to green before it crosses over the zero line. To me, that's the same as a cross. So we have our two conditions met. We have a trigger wave on the 4-hour. We have a Wolfpack ID crossover. Then we're waiting for our other confirmations, right? So now I look and see, okay, has Wolfpack ID crossed over on the 24-minute? Let's take a look and see. Right about here, Wolfpack ID crosses over on the 24-minute, okay? So I have most of my confirmations. I'm really looking out now for a trade. I'm really looking out for a trade. Now, we've been trading sideways, but we can see now in the future there was this huge pump, right? So now I'm going to look and see one of two things. If they're true, I will enter the trade. Either we print a trigger wave on the 24-minute, or we get a money flow crossover from red to green on the 24-minute, whichever comes first, okay? What comes first? This green trigger wave comes first on the 24-minute. This comes first, and you know, technically it comes right before a money flow crossover, but that would have been our entry because all our conditions were met. And so we enter right here on this candle, and when all our conditions are met, boom, we launch up 13-14% trade. Okay, let's see if this happens again. Let's go to another time here. Let's go to February 19th. Okay, February 19th. I'm honestly just picking random days here because I've backtested this specific strategy since 2019. And this specific strategy will keep you out of a lot of trades, but it will guarantee that you get into a lot of awesome trades. And just so you guys know, I have a question in the chat. Trip Burnett asks, isn't the Wolfpack ID and the VWAP the same thing? Guys, no, the Wolfpack ID and the VWAP are not the same thing. For example, right here we can see that the VWAP is crossing over the zero line, but down here we see the Wolfpack is already above the zero line. You know, they're very similar in certain instances, but when we line our cursor up, we can see that they don't always cross at the same time, guys. They really don't. And not only do they not cross at the same time, I mean, look at right here. We get a Wolfpack ID cross 3 candles after the VWAP crosses. And we just, you know, it's similar, but there are some times where they are very, very off sync. And so I use it as a secondary confirmation. So let's see what's happening here. February 19th, okay, we start to print a green trigger wave on the 4-hour. Wolfpack ID has, you know, I consider if it turns purple and bounces off this zero line, I will consider that as well a confirmation. And look at what's happening here, guys. Wolfpack ID has come up above the zero line on the 24-minute. Okay, so that's happening here. And a few candles later, in fact, well, unfortunately, we would have entered after this little pump here. Okay, we would have had to enter on this candlestick because that's when we confirmed that we had a money flow crossover. But even still, even though we missed that giant bullish candlestick, we still would have had a really nice, oh, I can't see how much that is, a really nice 8-9% move upwards. Okay, so let's come to our most recent scenario here, our most recent scenario, and look what happens here. We're printing a trigger wave on the 4-hour. Money flow, Wolfpack ID has crossed over that zero line. As soon as, well, Wolfpack ID is also crossed on the 24. As soon as we get this money flow crossover, boom, off to the races. Now let's look at some not so great trades that still turned out to be okay. On March 16th, we printed a green wave. Whether or not this was an anchor or a trigger was still up for debate because we couldn't really see a clear direction. We printed a trigger wave right here, or a wave, but notice Wolfpack ID was in the red on the 4 hour. Right away, this is telling us this is probably not the best time to enter a trade, okay? Probably not the best time, but let's see what was happening here. Okay, so when that started to happen, we were about to print a red dot on the 24-minute. Now notice, guys, money flow is in the red, right? And we could have maybe, if we didn't want to stick to all our confirmations, we could have entered right here because this was the first green trigger wave after we got all this happening. But remember, the 4 hour was not telling us to enter a trade. So we could have entered a trade right here. And this still could have been a winning trade even if we don't follow the strategy perfectly, right? We still got a nice 3% move there. And I actually took that trade and took that, it was a little less than 3% when I got out. But, whoa, sorry about that, y'all. So my point is, if you're waiting for all your confirmations, you are going to find those perfect entries. And if you don't wait for all your confirmations and you're just looking for dots, you might get into some good trades, but you're not going to get in those best possible entries. So, yeah, Trampus Hawk says, thanks for the vid, saved a few bucks for sure. Yeah, guys, shout out to everybody who is in the course, and even if you're not in the course, even if you're just watching these videos, I get so many messages from people saying, yeah, I've been doing so well trading with your strategies. Shout out to everybody who has been doing well trading using MarketCipher. It's a great tool, but it can take a little bit of time to get used to your tool. And so what you're going to do, guys, is you are going to come up with some confirmations. The way you're going to do it is you're going to look for synergistic properties, and then you're going to do what I just did, which is called backtesting, guys. You're going to backtest your idea. You're going to come up with a hypothesis. A hypothesis is what we call it from my part of the woods. We call it a hypothesis. We're going to go back in time, and we're going to look at all the instances where all of our confirmations, all of those synergistic properties happened. And when we see them all happening, we are going to then measure the profit or loss that we would have had. And to really make this as successful as possible, you guys should backtest this very, very far into the past. At least, I would say, a year and a half. And what you're going to do is you're going to take out even just a simple notepad, and it could be an Excel sheet, and you're going to just take note of every trade. So you're going to do one trade. It was a 3% gain. Okay, trade 2, 12% gain. And you're going to keep doing this. Trade 3, 2% loss, right? And you're going to keep doing this. Try it as many times as possible. If you can get up to 100 instances where this has happened, where you're going back in time, you're looking, okay, trigger wave on the 4 hour, Wolfpack crossover on the 4 hour, Wolfpack crossover on the 24-minute, money flow or green trigger on the 24-minute, boom, as many times as you can. Then you're going to find out the overall profitability of your strategy. If you can find 100 trades and you can say, okay, 85 out of 100 trades put me in profit, then you know that your strategy is 85% profitable, which means you can enter with confidence knowing even if you take a loss, you know from your backtesting, from your studying, that over time you are going to be profitable. Because even if you take a loss, you could lose 15 trades in a row, and you will know that the next 85 trades are going to offset your losses. That's what's so powerful about backtesting a strategy like this. It can give you confidence even if you're in a losing streak. And it happens, guys. All traders end up in a losing streak. It just happens. So, there's a few more things I want to talk about. Backtesting, very important. And guys, if you're unaware of this feature in TradingView, you can actually even use a replay mode where you go back in time like this, and you can play one frame at a time, one candlestick at a time, the price, so that you can like trade as if you were trading in real time, right? And see what happens with the candlesticks. Okay, that can help you backtest. You don't need to do that. Another way to backtest is to just look and measure. Look at the setups and measure the percentage, and keep a notepad or an Excel sheet of every time that happens. Yeah, Jared wants to know, can I put a list in the description of the vid? Yeah, guys, I'm going to put this list in the description of the vid right now. I love saying vid instead of video. I'm all about vid instead of video. Let's put it in there. Boom. Guys, also in the description, if you want to sign up for my trading course or just join the free Discord, here's the link. If you want to get MarketCipher, here's my affiliate link. Guys, just so you know, I am providing a trading course, a comprehensive trading course that will teach you everything you need to know about technical analysis and using MarketCipher. And basically, everything I'm telling you in this video is going to be expounded upon in great detail so that you can build the confidence you need to actually start trading profitably and having the confidence to know that even if you find yourself in a loss, you are not going to be losing over time. We're going to teach you risk management. In fact, today at 2 p.m. Eastern Time, we're going to start our first session on MarketCipher B, where we're going to go over just the basics of MarketCipher B and MarketCipher A and learn what everything is so that we can use these tools to create our strategy, create our confirmations, create our trading algorithm. So if you're interested in this course, guys, join the Discord, send me a message, we'll figure it out. And also, yeah, that should be in the description of the video now. Also, shout out to, let me see. Shout out to Crypto Clint, man. This dude with the yesterday, he was the one who made the Cointelegraph article about my like button reaching new all-time highs. Today, in the news, guys, Coinbase adds support for the Jason Casper like button. Guys, FOMO into the like button. Now that Coinbase is adding support to my like button, we know it's going to pump. Let's take a look at the like button chart here. And this thing is going completely parabolic. MarketCipher B and all the support and resistance lines, Wolfpack ID, they're telling us we are just far away from the top. There's no bottom in sight. Our next level of resistance, guys, is not until $600,000. So you don't want to be left on the sidelines wishing you had got into my like button when we're way up there. No, you want to be an early adopter. And don't kid yourself and say you're just in the like button for the technology. You know you're not in the like button for the technology. You know you're in the like button because it's going to make you money. So FOMO into the like button, for sure. Subscribe to the channel if you're new, for sure. And let me move on with this. Enough of my concupiscence. And if you guys don't know what concupiscence is, I can tell you guys don't read your King James New Testament, because that word is not used in modern English anymore. So, let's see here, guys. Step number 5, have patience. This is so important. It's so easy when you're backtesting to look at the charts and find all these trade setups in a short period of time, right? I just found how many awesome trades in the course of this video, probably 4 or 5, and I could find many more. But here's the thing, y'all. Here's the thing. In real time, each one of these candlesticks takes 4 hours, right? In 6 candles, in only 6 candles, it's a whole day, okay? So we have had literally a whole day pass us right here. And besides that one entry that was right here, all the rest of this whole day, there's no opportunity to trade using this strategy. So if you're using this specific strategy, you might only enter 1 or 2 trades a week, or maybe not even. Recently, when we had all this dumpage happening, there were no opportunities to really enter a trade because Wolfpack ID, we were not getting all our confirmations. So what you need to do is you need to be patient and understand that the trades will come. You cannot force them onto the chart. They will come if you are patient. Another thing you can do is test multiple strategies. Test multiple strategies out, guys. Come up with multiple strategies for yourself. Whoa, Flop and Groper in the house. Shout out to Flop and Groper. Come up with multiple strategies. This exact process right here, guys, you can come up with multiple strategies on multiple time frames so that you always have an opportunity to trade. Also, remember, you can come up with multiple strategies for multiple assets, right? There's always going to be an opportunity to trade, but you need to be patient. If you're waiting for a Bitcoin trade and you don't see one, then perhaps take the time to go look at other coins, other altcoins, other assets. If you're trading Forex, you can do that. Stocks, whatever, because this stuff applies as long as you're using marketcipher and finding your confirmations. It applies to so many different assets, so many different time frames. Create a catalog of strategies where you're doing this. And guys, it does take a lot of work, okay? For me to come up with the strategy I just showed you, it took me months and hours of staying up all night looking at the charts. This is not easy, but once you put in the work and once you find something, it's gold, okay? And it will make you feel so fulfilled that you put in the work and now you have that confidence. You've back tested it. You know your strategy is 85% profitable. You know you could lose 15 times in a row and still be winning. I highly recommend y'all do that. And then stick to your strategy, guys. This is so important. If you come up with a strategy like I did with this, and you see, okay, we're printing a green wave right here on marketcipher B, but Wolfpack ID is not confirming for me. Don't say, well, you know, I could still enter a trade. I might still make some profit. Don't let your mind go in that direction. And here's why. Listen, this is very important. And I am reminding myself this too, guys. Everything I'm talking about in this video is right to myself as well. You have put in the work to come up with and test a strategy, and you know your strategy, you know the profitability of it. You know that you will win 7 out of 10 trades, 8 out of 10 trades, 9 out of 10 trades because you've back tested it. If you deviate from this strategy, you are asking to lose because you're deviating from the winning plan that you already came up with. So it's so easy to do that, guys. It is so easy, especially if you see price pumping, right? If you see price pumping and you were looking for a long, you get that FOMO. If you see price dumping and you were looking for a short, you get that FOMO. Tell yourself, guys, okay, I have my strategies. I know that they're profitable winning strategies, so I'm not going to FOMO because I know over time I'm going to be profitable. I'm constantly working and coming up with new strategies, which are going to allow me to have more opportunities to get in trades in the future. It's a marathon. It's not a sprint, y'all. And guys, constantly look for ways to improve, right? I am constantly tweaking and improving my 4-hour, 24-minute strategy. Just recently, I have made an addition to it, which is this right here. These two things didn't used to be either or. They did not used to be either or. Now, after further back testing and tweaking, I know that whichever comes first, whether it be a 24-minute trigger wave or a 24-minute money crossover, that is where I will enter. Okay? Tweak your strategies, back test them again, find out how you can find those really good entries. Okay? Don't just feel like you've arrived. Okay? Don't just feel like you've arrived. Let's take a look at what's happening here. Let us take a look. Yeah, I don't know, guys. I don't know what's happening right now. If we're going on my 4-hour, 24-minute strategy, you know, we would not enter here. So if we had this awesome, massive breakout and I only had that one strategy under my belt, I would miss that trade because of what I just told you, right? Wolfpack ID, crossing down. It's coming right down. Boom. No green trigger wave. We're about to print a red one on the 4 hours. So, you know, wait for your confirmations. Okay, how do I exit with the strategy? Guys, how do I exit? This depends on a lot of things, and I cannot wax detailed. Is that proper English? I cannot wax detailish. I cannot wax detailish in this one video. However, I should make a video about how to exit. Let me quickly discuss. It really depends, guys. So I love to enter big swing trades in a bull market. I love to enter large trades in a bull market. So really, I was looking to trade from here to here. I was looking to trade from here all the way to here, which I actually did. I got out of this trade. Uh, this whole past week was crazy for me, right, guys? I entered at 52K, right around here. No, I'm sorry, right around here, because I got a confirmation. I got a confirmation for my strategy. And then when we started to print this massive bearish divergence, I got out and I missed the pump to the all-time high. I missed it. But typically I'm looking for trades where I can enter down low like this and ride them out until I get wicked out. And so in these instances, in these long swing trades, what I'm doing is I'm looking to buy in here and then take profits out at the highs, and then take those profits, put them back in at the lows, take them out at the highs, put them back in at the lows. And what this does is it compounds my trade all the way up. I don't use leverage for these long trades. I just compound my profits back into the trade. And it's a great way to make money, guys, with low leverage, 1x, 2x, 3x at the most. But if it's a shorter move, right? Like, let's say I'm only trying to capitalize on a move like right from here to here, okay, which is a really nice move. What I would do is I would enter when I get my confirmations, and then on the 4-hour time frame, when I see that we are starting, I see that we are starting to print a red dot, that's when I would get out. And that's also when I take profits out if I'm looking to stay in the trade long term. Don't wait until you get a red dot. Look at these wonderful luscious lumps here, guys. Look at these luscious lumps of lovely. Do I lose a lot on fees? No. If you're using low leverage, yeah, you're gonna pay some fees, but the gains offset the fee. I'm telling you, I've been in longs for a long time. I'm in an Ethereum long right now. I've been in an Ethereum long for way too long, and I think my fee is like a couple bucks so far. Okay, compared to my position, it's very small. So before you see the red dot print, right, you're just gonna, you can tell when it's curving over. That's where you would look to exit the trade. You can tell that momentum is about to end. Yeah. And you know, the thing with these trades is, guys, it really varies. Like, depending on the market conditions and what's happening, depends on what kind of trades I can enter, how long I can stay in the trades, and things like that. So yeah, this is it, guys, to find those winning trades. I'm telling you. And also, y'all, I do have some other videos on my channel. If you come to my channel and you go to my channel and click on my channel, and you're at my channel, when you come to my channel, then you can come to my channel, and on my channel, you'll see on my channel there's a MarketCipher tutorials playlist on my channel. Go ahead on my channel and click that. And there's a lot of cool stuff in here, guys. How to create a winning strategy, very similar to this video, but this video gives you more detail. This just gives you the overview. And then I have a scalping strategy in here. I have a swing trading strategy in here. I outline my 4-hour, 24-minute strategy in here. I have a whole bunch of tips, how to stop losing trades, how to win every pattern breakout strategy. Yeah, that's the way to do it. Yeah, flopping groper. I should make flopping groper. I should give him a wrench. Let me see if I can do that. Here we go. Good old flopping groper. Let me see if I can do that right in here. I think I can. Let's see here. Yeah, I can give him a wrench. Boom. No. What? Oh yeah, cool. There we go. All right, so guys, behave, because flopping groper, he will ban you if you do anything bad. Did it work? Does he have a wrench? Did that work? I don't know. Dang it. I don't know anything about YouTube, guys. I don't know anything about the YouTubes. Should be working. Let's see. What the heck? Oh, these are blocked words. Okay, cool. Bitch. Oop, I just said bitch. Is that bad? I don't know. Okay, those were the words I had blocked in my chat. Okay, let's answer some questions, y'all. Cool. Flop and Groper is officially wrenched. Cool. He's like a plumber. He's coming to fix the sink. He's got the butt crack hanging out the back. He's got the wrench ready to fix that drain. All right, let's see if anyone has some questions. And I will do my best to answer. He's cranking. He's cranking in the chat right now. Do I enter on 24-minute or 5-minute? Okay, guys, so when you are coming up with these strategies, you are going to choose your own time frames and backtest them. And like I said, I have found that multiples of 10 work the best. So if you want to trade on that 5-minute, I would recommend, and this is just my recommendation, guys, remember, I am not an expert, okay? I am not the creator of marketcipher. Okay, so this is how I use it, right? So I would go to the 50-minute time frame, the 50 minute. Okay, I would come down here and I would type in 50 minutes and add that time frame. Okay, I'm gonna add it, and where is it? Where's that 50-minute time frame now? Where is that thing? Let me find it. Aha, the 50-minute time frame, and then I would come over and turn on the 5-minute time frame. And I would look for synergistic properties here, right? That's what I would do. I would look for synergistic properties where I can see, okay, on the 50-minute, we happen to be printing a green trigger wave. Where are we at? Where are we at? Where are we at? Okay, yeah, printing a green trigger wave on the 5-minute, right? And then we get a money flow crossover. I'm sorry, on the 50-minute, we can see that we had this nice double bottom, this double bottom, as we say in my made-up language, this double bottom, and we see clearly money flow is starting to cross on the 50-minute, right, the 50, and we're printing this nice green cluster of trigger waves right here, and really, I could say, and this is just, look, I've never done this before, but look at what's happening here. We get this nice cluster of trigs, we got the trig cluster right here, this trigonomic cluster of triggers. And as soon as we now get the wolf pack crossed over and this first trigger wave after money flow crossed over, kabloom, man, kaplow, right? We're just, the trigonometry is amazing. The mathematics and the science are powerful, guys, powerful. Trust the science, trust the scientists, guys. Everything they say is absolute truth. You can never question it. You can never question anything that a government scientist tells you, ever. So, let's see. I just opened this up for the first time. I have never really backtested this. And look, we came up with a great synergistic property, y'all. We did it together. Synergistic property. And I noticed, wow, that's pretty cool. I wonder what happens. You know, I noticed something cool. Let me go back into the past and see if I can find other times where that happens, right? Other times where that happens. I mean, obviously you have to come up with more synergistic properties than just a trigger wave here. But let's actually go back and see what happens every time we get one of these bottoms, right, on the 50-minute. Let's say we get a double bottom, right? Let's use the double bottom as our synergistic property just for this backtesting that I'm doing live right now. You can't find this stuff on cable TV, guys. You can't find it on satellite, okay? Only on the Jason Casper YouTube channel, okay? I am the Anthony Fauci of marketcipher, guys, okay? Shout out to Flop and Groper. That's a funny one. Okay, so the double bottom right here on the 50-minute, all right? This is the first synergistic property we're looking for. Then we're going to look for the money flow starting to curve and a cluster of triggers on the 50-minute. We see it right here. Okay? So when this happens, we're going to come over to our 5 minute, right? And we're going to look. We're going to look if I could find... It's always a problem to find your cursor when you're using such small time frames, guys. Let me see. Okay. Man, I lost it. I am losing it, guys. This was on March 6th. Okay, wow. Yeah, we gotta go. We gotta go way back. Backtesting on small time frames, guys. It's gonna take you some work. It's gonna take you some time. Okay, here we are. Let us zoom in now. We're zooming in. Okay, so we got our double bottom on the 50. We got our cluster of trigger waves. Let's see what happens when we get that first trigger wave after this thing starts to print. What happens? This would be our first, technically our first trigger wave right here if we want to be technical. Or if we say we want to take the first trigger wave after money flow crosses, we would enter right here. So let's mark this position right here with a vertical line. Let's find our price and see what would have happened if we enter here. What would have happened? And this is how we're going to backtest, guys. This is this painstaking process of backtesting. And would you look at this? Would you look at this? Guys, I think we're onto something. I think we might be onto something. Look at this. As soon as we enter, we get this giant boom pump, and it just keeps on pumping, man. We could have just stayed in this trade for 22 hours and made a nice 7.2%. If we were using 1000x leverage, that's 7,000%, okay? Don't ever do that, by the way. I don't think you can do that anywhere. But don't do that. And guys, remember, this is not financial advice, okay? I'm just a guy on the YouTubes, right? Just a farm boy down in the country, all right? Got my southern accent. I don't know nothing about nothing, all right? Guys, know if you listen to my advice, not only will you lose all your Bitcoin, you will lose all your fiat, okay? You will lose your keys, and you won't be able to find them, and you have a very important place to be. You have a date with a girl who you really like, and she finally agreed to go out with you. She's going to meet you at 7 o'clock. It's 6:55. You cannot find your keys because you lost them because you thought I was giving financial advice. Okay? Yeah. So don't do that. People want to know about stop losses. That's a very subjective thing, guys. And honestly, depending on your skill level, your confidence, and the type of trade you are entering, it really depends on where, if, and how you place your stop loss. It really depends. It really depends. If you're monitoring your trade, you don't need a stop loss as long as you have in your head a place where the trade becomes invalidated. That is very important. When you're going into a trade, you must have a plan to enter and exit that trade. You must have a level, if you're longing, where if price goes down to that level, you get out of that trade. Okay, that is part of your trading plan. And if you're shorting, you have a level where if the price goes up to that level, you get out of your trade. If you can do that, then you might not need a stop loss. Or put the stop loss at that level where your trade is invalidated. If you're in a long swing trade, what I like to do is I like to put my stop loss below the previous swing low, okay? Because if I feel that we're in a long uptrend, right? If I feel that we're in a long uptrend, and I think that this is the uptrend right here, we're going up, 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 up. I know that if we come down and we go past this previous swing low here, that this uptrend is invalidated. It's invalidated because we're printing a lower low. If we're printing lower lows, that means we're in a downtrend, not in an uptrend. And so if I'm just continuing this trade up, I'll just move it below these lows, right? Because I know if we start printing lower lows, then the trend is invalidated, right? So I put it below here. And, you know, maybe I would have moved it up here, right? And then I would have gotten wicked out, stopped out here because now I could say, okay, the trend is invalidated. And it is because we started printing lower lows and lower highs. Lower lows and lower highs. Yeah. Yeah. All right, let's see if we got any more Qs. And maybe I'll have some As. Okay. And if not, I'm going to have to head out kind of soon, guys. Do I use a stop loss on my 424 strategy? Like, here's the thing. I use that strategy in a versatile way. Sometimes I use it to enter a single trade, and other times I use it to just add to and take profits out of a swing trade. So it really depends, y'all. Um, do I use trailing stops? Mark Knighton wants to know. Yeah, Flopping Groper has some good advice. If it, you know, you guys know the song. I'm not gonna try and rap on here because I'm trying to keep my mixtape private until I release it because I don't want you guys to pirate it. What was I saying? It's trailing stop loss, guys. I really don't like trailing stop losses, and here's why. Here's why. Unless you're in a very risky trade, like I've used them in extremely risky trades that I should not have been entering. Right, high leverage trades, high risk, where basically if that thing goes in profit, I'm like, all right, I got to lock in this profit because if it goes in the negative, I'm going to lose way too much money, way more than I'm willing to risk. So then I will use a trailing stop loss, but I haven't done that in a long time. Man, it depends. Like, here's the thing. The only time I would use one now is if I'm in a trade and I've already gotten to the point where I know I'm comfortable taking profits out, and I don't want to make any less than where I'm already at. So let's say I come in this trade here and I had my take profit level set at this previous resistance, and we come up to this resistance, and then I see, okay, I can see that market cipher is telling me momentum is slowing down, but we're still going up. So then I would just put a trailing stop loss right here where I originally was going to get out of the trade, and it would just keep following it up so that, whenever we come back down and I get stopped out, I'm maximizing my profits. But you just want to be careful with the trailing stops because it's so easy to get wicked out. You could have been right that let's say you're shorting and you have a trailing stop. You could have made so much profit, but you got wicked out because these volatile, crazy wicks. And sometimes it's just not worth it. Sometimes it's just not worth it. Vyers in Numeries says, double anchor waves close together I have noticed on the 4-hour generally is preceded prior to a strong uptrend. Do you agree? I absolutely agree. Let's just take a look at that, right? Look, we're on the 4-hour. We're on Bitcoin. We have double bottoms right here, and then shwam, huge run up. Double bottom right here, kaploom, huge run up, right? Let's go back even more in history. I love history, guys. I'm not good at that math and science, but when it comes to history, okay, I don't know how to read, but when it comes to history, okay, look, we have a double bottom right here, and then whew, nuts, totally nuts. Look, double bottom right here, boom. We have a weird thing right here, which it's so funny to see how small and insignificant these moves look back in the day. But we got to remember, guys, back in the day, these were some significant moves here. These were some significant moves. And man, look at this awesome. Look at this awesome. Man, if you guys ever see something like this, that's on the 4-hour where you got like a nice bottom money flow in the red. Then you have this perfect stair step up. Man, that's a good entry right there if I ever done seen one. Yeah. I mean, lately the double bottoms have signified a huge run up again, yeah. So, guys, appreciate y'all being here. Appreciate you all being here. Guys, make sure to FOMO into the like button. Again, FOMO in. We got almost 800 people in here and only 466 likes. I mean, guys, you know that Coinbase is adding support for my like button. And historically, whenever Coinbase adds a new asset, that asset pumps, right? Because all the new investors who just heard of Bitcoin, they're like, yeah, my grandson told me about this Bitcoin thing, and I think I'm going to get into it now. And I went on that, what is it called, Coinbase? And they had a few other things on there too, So I just bought a whole bunch of them little ones because they might pump, who knows, they might become the next Bitcoin, right? So I figured I'd get some of them. Guys, all those old grandpas with the southern accent, they're going to be buying my like button. FOMO in. And also, guys, sorry, do I use the colored RSI in marketcipher B? Yeah. Yep. Yeah, I do. And it's really the colored RSI, the stochastic RSI. No, I don't. I'm sorry. I didn't mean to lie to y'all. I use the regular RSI, the white one, which I don't know what color it is, stock on marketcipher B. I was never a big fan of stochastic RSIs, but I'm not saying it doesn't do anything. I'm just saying I don't use it. So perhaps you can come up with a strategy that will work. Yep, bet the farm on my like button. Guys, I have a literal farm on my property. I'm thinking of just selling that farm and putting all of the money into my own like button. People hate the fake voice thing. They think it's so cringe. It's so cringe. Well, I mean, y'all don't have to be here, but I have other accents too. You know, you guys know I have the UK accent for when I'm using my VPN from the UK, which I don't do anymore because UK banned ByBit. I got my Aussie accent, right? Yeah, and just so you guys know, I don't know if you're aware of this, but the voice I'm using now is actually a fake accent because I don't want people to know what my real voice is. So, you guys don't know if my southern accent is my actual voice. And also, you guys don't know if my British accent is also my real voice either, alright? So, I like to keep things mysterious. I'm here to provide you guys with advice about using marketcipher. And as far as the voices go, well, if you don't like the medium by which the information comes to you, you don't need to be here, alright? Okay, Dan Clark, UK, ByBit still good till the end of March. That's good to know. That's good to know. Let's check out what's going on here. Oh man. Wow, got a double bottom on the 24-minute. The 4-hour printing a red. I would call that a trigger wave, you know what I'm saying? You know what I'm saying? Cuz like we can kind of see this direction coming down, right? We can kind of see I don't know, guys. I'm going to have to cut the stream. I got some stuff to do, but I appreciate all of you guys being here. May the Lord bless all of you and keep all of you and protect all of you. In the name of Jesus the Messiah, Yevarechecha Adonai v'yishmerecha b'shem Yeshua HaMashiach Elohei Israel. I pray that all of you guys are blessed. And yeah, I'm going to have to cut this stream kind of soon, guys. I got some responsibilities to take care of, you know. But let me see if we have any other questions in the chat. The smallest time frame I use, guys, I have experimented with many time frames, and the smallest time frame I like to use is the 5-minute. Seriously, guys, I don't like to use anything lower than the 5-minute. Okay, I'm not a scalper by any means. You know, if I got my southern accent on, my brain just don't move that fast. All right. And if I have my UK accent on, also, I'm too analytical to go into trades quickly like that. So I need to come back and analyze things. All right, peace, guys. Appreciate y'all for being here. See you soon.